Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We get the Dow Industrials up 213. NASDAQ is up 67. S&Ps are up 26. Gold contract up $6.80, trading at $1,219 an ounce. Silver up 13 cents at $17.37 an ounce. Platinum up 17 at $1,275 an ounce. Copper flat at $3.03 a pound. Light sweet crude down $1.43, trading out at $87.42. That baby's going down to that 85 level. Bonds, the ever-ready bond market just won't stop. Wide price spread, accelerated volume, moves with conviction. You get the 10-year right now up 10 ticks at 126.10. The 30-year is flat at 140.19. King dollar, giving it back, down 300 ticks at 85.48. The euro up 51 at 127. The yen up 26, trading at 108.28. Our phone number is 877 927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, check it out. You're going to love it, too, man. I mean, this volatility is where it's at. What do we have? Well, I did get a couple emails that a couple of traders did need some Xanax, and I can understand that. So, what do you have out here? S&P, cash S&P. We got to 1935. 1935 gets into the 1926. No, we got to 1925-25 rather. 1925-25. That broke the last swing low out here that we had of the 2nd of October. And guess what? You're gonna have a decisive break with volume. S&P right now with this little baby still wants to go up and test this 1985. That's the way this is setting up at this particular point. Dow Industrials. Go take a look at the Dow Industrials. What you have with the Dow. Dow Industrials up 213. You're trading out, you actually got to a lower low, though. That's what, see, the divergence here, folks, you actually got to a lower low and had higher volume. That means you're going to be right back downtown. NASDAQ Composite. Same setup in the NASDAQ Composite. NASDAQ Composite gets down to 43.55. NASDAQ Composite is going to have monster volume out here, too, by the way. Right now, you're running out at 1.872 with an hour left. Bonds, no, gold contract next. Gold contract, folks, gold, silver, they got their bottom. It looks to me like they got them in too, baby. Gold, up 640, trading out at 1218.70. You had the spike down to that 1183.30 on Monday, rejected lower price, had lighter volume, starting to move with some gusto right now. Would like to see a bigger price spread. We've got to 1221. It's not bad. You know, you're inside a range. Once you got inside the 1208.80, you're inside the range. The larger range, however, is that 1241.70. That was the swing point from June 1st. Silver. Now let's check out the silver market, because silver, folks, absolutely had got destroyed, got under all its swing points, and what we had out here yesterday is this. Silver had the expansion up yesterday and had a little juice behind it. I like what's happening out here today. Why? Because you back down into Monday's area, rejecting that area, you're building some cause, and that's what it's going to take for silver to get back inside $18.70. That's a long way for silver to get up. Silver likes to move like that, though. So it got to start. The XA, or here, we go to the GLD. You take a look at the GLD. What we have with the GLD is this. GLD was this is going to be, we're all going to look back on this. This is going to be a classic test. I mean, a technical classic test. The GLD had traded down to 114.42 on a weekly basis, had 38.9 million shares. It was testing the 114.68, so it went 30 cents below it, 34 cents to be exact, 36 cents below it, rejected lower price, had lighter volume by approximately 70%. That's a classic test. Now what you need out of that test is that you need a wide price spread, accelerated volume. It's building on it. That's the bottom line. Looks pretty good. Bonds. Let's go to the bond market. Okay, so check it out. So the 10-year right now. 10-year is at 126.10. Taking out the 126.12. We've hit 126.13 from August. Wide price spread, accelerated volume. We bring this up, TY1. You want to see something here. This is pretty intense. So if I bring up the continuous contract, and I'm going to put this just on a couple of years weekly, what you're going to see is this. We're coming into the tops of where we have traded from since June of 2013. Bottom line, we're at 126.10. You take out 126.24, let me tell you something. Intense. And you take out 126.24, you're going to be at 130.25 in a heartbeat. Why? Because when rates had come down, folks, you got to remember, well, bonds had come down, rates had gone up. We came down very quickly. You know, bottom line is that we'll see how we overtake this area. Now, the overtaking of the area, number one, goes like this. Once we're over 128.02, that's 123. Add 5 points onto it is 132. Yeah, we're talking 132 bonds, man. 132 bonds are going to take us back to May of 2013. And bottom line is that mortgage rates are going to go down beyond belief. USZ 4, the 30-year. We take a look at the 30-year bond. This is what we have with the 30-year bond. 30-year bond out here. USZ 4. Okay. 30-year bond. Yesterday was amazing. And, you know, this is how this runs, folks, okay? And, you know, I've been bringing this up, but this is a big heads up. The 30-year bond is absolutely ahead of the 10-year. And the 30-year is telling you what wants to happen with the 10-year. The 30-year yesterday come charging into this high swing point of August. That swing point up there had 530,000 contracts. The price is 140.16. Yesterday, we go into that with 420,000 contracts. Today, 518. 518 versus 530. You got an hour left. Guess what? You're going to blow that away with volume. So, what do we have? This bond market is amazing. So, we take a look at this, and there was a statistic out here today. So, the 30-year bonds, by the way, are up 20% this year. 20%, yeah. Okay. Now, a longer-term contract, the continuous contracts on bonds, right? I can make the case that, okay, it's an ABC up. And if that's the case, the way this is going, folks, is that we're going to, let's see, so if I do 127, 37.47, 13 bucks, A to B, 36.46, 52. Yeah, so watch how this is shaking out. This is sick. The A to B equals C to D is, I'm approximating it right now, 152. 152 is the high. So we're going up to at least test the highs in the bond market. Pretty amazing. King dollar. Let's go over, take a look at King dollar. What do we have with King dollar? King dollar basically topped out, short term, giving it up. Not a huge amount, but it certainly was a huge amount in the context of how we shot up on Friday and gave it back on Monday. Now what you have, you do have an expansion of volume as you're starting to go to lower price. So what does that set up? That sets up a normal correction in a dollar that does want to go higher. That's the way that this is set up. You are getting volume on the way down, so that says, okay, you can do a 50% correction. Right now, the 38% correction gets you at 84. The 50 gets you at 83.10. And, of course, that's what's giving the gold market breathing room. The Fed minutes come out here today, and what the Fed minutes are talking about is that the policy makers are looking at a global slowdown and a stronger dollar that is going to basically that pose potential risk for the outlook of the U.S. economy. Bottom line is that there's no doubt about it. The dollar's going up. Europe's a mess, folks. It's just Europe's a mess. And you hear analysts continually say that our large caps are going to go higher. And it's like, are we really going to go higher? 50% of the earnings from the large caps, folks, come from overseas. The dollar's going to kill them. 877-927-6648. Dow Industrials right now up 216. Nasdaq's up 74. S&Ps are up 27. Gold's up 730. Silver's up 14 cents. We're going to be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Caterpillar's up $1.36. You get Disney up 65. Oxy is up 4 cents. The oil and gas sector's having a tough time out here. Big Blue's up $3. You got Johnson & Johnson up $2.19. 3M is up $3.60, $3.19 rather. We go take a look at the oil market out here. Oil today, folks, is trading out at a price point of $87.47. You hit $86.83. We've done 339,000 contracts. This little baby is on an ABC structure on the way down to 85. Now, what's intriguing about this is that you have the context of the dollar pulling back, coming down. gold and oil was going down simultaneously. Gold flipped around, oil continues lower. We go over to the XLE, we take a look at that whole sector. XLE out here today, monster volume. You're talking about we're at 31 million shares. It broke out the bottom with a vengeance. Okay, the bottom that we're talking about, the first time that it came down, folks, and this is a classic when you're looking at stocks, whether they're going up, sectors when they're going up or they're going down. What you had here is that last Wednesday, you get down to a price point of $86.70. You do, excuse me, you do 29 million shares. That was coming into the swing point from 6 months ago. That swing point had 13 million. You do a small bounce, and here's your correlation. You do a small bounce, you get up 20 million, you get up to a price point of 89. And then what does it do today? It just blows it apart. You do 31 million shares, you're breaking the swing lows, and then we put this on a weekly basis, and this is the biggest heads up out here, and this is what it is. The benchmark on the S&P, because I'm going to go back to the S&P and show you something in a second. So the benchmark on all the indices is the week of February 5th. That level inside the XLE, the high of that is 84.17, the low of that is 81. Now, your volume characteristic, folks, is just as important. Your volume characteristic there is 98 million. And the reason that it's so important, when you put both of them together, is the aspect that is the aspect that when you have this wide price spread, accelerated volume on the way down, as you come in and test that level, are you going to test it with lighter volume, heavier volume? Well, we came into this last week, and we were coming into it with 105 million shares. So your correlation is 105 million versus 98. What's happening this week? You're coming into it with even more volume. What is that all about? Thus far, we've got down to a price point of 85.47. The high of that February 5th is 84.17. This is going to go into it, number one. It's going to test it. And the way that it's coming into it right now, it's saying it's going to break it. Okay, so with that aspect, right? Because you got to remember something. This is the XLE of the largest gas and oil companies in the world. You're talking about Exxon, Chevron, Schlumberger, ConocoPhillips, Occidental, EOG, Halliburton, Anadarko, Williams, the whole ball of wax. Okay, so now let's go over to the SPY. So I want to show in the SPY what you have. Well, first, the SPX. So the cash SPX, we're at 1960 right now. When you take a look at where that February 5th benchmark is, the top of it is 1798. So even if we hit the top of it, guess what? We're talking about 160 points down, 162 S&P points. That's the first part. This one is more, well, not that it's more important, but no matter what type of system you have at home, you're going to be able to put this channel line up and see just exactly what's happening here. And what you have happening is this, is that we have broken, this is how it goes. Last week, we broke, is it 13? Let's use, okay. So what we did is this. Last week, we broke the channel line that starts at 1340 S&P, 1340, not 1768, 1340. We broke it with conviction. We finished the week, however, inside the channel line. So you finish inside the channel line, guess what? You can go higher. This week, what do? We did the same thing. So at Friday, we'll see where we stand. Bottom line is that what you have here is that that channel line is getting weaker and weaker. Every single time you come down and slam it, you break it. Last week we broke it with 683 million shares. Thus far, we've already done 400 million shares. What day we are? Wednesday. So bottom line is that we'll see whether we get an expansion of volume, and in fact, will it close under that level? Right now, we are over that level by 41 cents. That level is it's 196.04. It's a ballpark, and right now we're 196.44. So you put those babies together, folks. It's really important to understand where you stand in the much larger picture. Dow Industrials, that just got a little goose up. We're at 255 right now. Putting juice into the Dow Industrials is that you have Merck. Merck is up $1.71. United Healthcare is up $2.42. Microsoft is up $1.27. You have Intel up 87. Taking it away, not that it's taken away much. No. That means that DuPont's down 51 cents. You got Cisco flat. Yeah, the only stock down in the Dow Industrials is DuPont. Down a couple pennies. That's it. Gold. Let's go. So the gold equities, folks, they're basically taking off again. Classic test. Gold Corp just is up $1.81, $1.83. What this one did here, they're all doing the same thing. They were going down. They're testing the high volume swings from the first bottom in gold after a year and a half, and that was the June 2013 bottom. Gold Corp was 22.22. You had volume of 55 million. That had come down last week at 30.4. So you get the wide price spread. We're getting the wide price spread, accelerated volume out here today inside many of these gold, inside, well, let me see the silvers, PAAS. Let's see how we're doing with silver. Silver's happening too. So when you get something like that, what you're going to be looking for, you look for to buy the pullback. 877-927-6648. Let's go over to Europe. So go to the FTSE first. What you have with the FTSE. FTSE breaks out a bottom out here. We're at 6482. And let me put this back for a year, actually. How it's going to get intriguing. Oh, man. Okay, I'm going to put this on a weekly so I can get a cleaner picture of it. So the FTSE, she's going to have to bounce quick. The FTSE right now is at 6,400, 6,482. She wants to get down to the 6,000. She's breaking lows with volume. You know, we'll see whether she can hold up for the next couple days. DAX, the DAX in Germany. Now, what the DAX in Germany had already shown is that continued to break the benchmark, meaning the February 5th benchmark. See, that benchmark, folks, is a benchmark in Europe and in the U.S. The FTSE, I mean the DAX, has basically, it literally took it away in a big way. Now, what the DAX is doing right now is breaking all the support it had since November of 2012. You break that level, and that sets up a DAX. Let's see. We get 89 at the bottom. Yeah, you get 10,000 at the top, so 1,100. That's 79. That's 7,800. Yeah, the DAX is on the way to 7,800. It's another 1,000 points down. That's some numbers, man. You stay right there, folks. Dow is up 255. Nasdaq up 82. S&Ps are up 31. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 252. Nasdaq is up 80. S&Ps are up 31. And let's go over to our man, Mr. John Logan. Don't forget, folks, every trading day we start live content at 8 o'clock in the morning Eastern Standard Time. We go from 8 to 6. You can get all that programming right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV simultaneously, just go to tfnn.com. Hit the Tiger TV button on the right-hand side. You get the audio, you get the video. Our man John Logan starts us off every trading day at 8 a.m., and he's coming to us live from Asia right now, and he's got up early. John Logan, what's going on?
Hey, Tom. Good to be back with you here.
See, I wish I could send you over some Starbucks coffee right through the air right now, man.
Hey, I got a 2-hour now, thanks to you. I'm back up.
You're a trooper, man. You're a trooper. I'm telling you.
What happened? I went to bed, and oh my God, the S&Ps were at 1925, and I come back at there at 1960. Whew. Okay, Fed minutes, right?
That's right. It ran up to it, and then it just took off. And needless to say. Folks, this is, we'll see how this shakes out. But the way this market is trading is that it's a bear market. I know we're still at highs.
That's true.
These type of moves, fast moves like this, counter-trend moves, and they give it up again, that's the ultimate. And the thing that's amazing here, there's no doubt, John, I got a couple, well, I got one text too. I love you, Jeff. I know he's a great tiger. I got to read this to you though. It's freaking hilarious.
Go ahead.
Where's my Xanax? You can't blame him either, man. I'm telling you, it's intense.
Well, you know that one of the things you just said is so true. And we're going to talk a little bit deeper into what's going on right now in a second. But in 2008, when that thing was going down, we'd have 300 to 400 point up days, if you remember that.
The biggest day I ever had is that we were short the day before, and personally, I went long because the tick was so amazing. The newsletter went long, and it opened up 900 points, folks. And that was the largest day I've ever had in the market. And we closed everything that day and then flipped to the short position again. It was insanity. And when my accountant was actually doing my books that year, he says, "Is this week really real?"
Well, this.
Yeah.
Well, this, at that, I remember that. I remember every day of 2008 because that was a heck of a year to trade. But, we've been talking about, is this for real? Is this the technical breakdown that actually might have some follow through? And I actually still fully believe that. And these type of moves up are things that are going to happen in that type of phase.
Yes,
if that's the case. And 1955, we talked about that pretty religiously as the weekly unfair low that we kind of have to have closes below and stay below.
Okay.
And that's the fence, that's the rocker arm for me. We tried that last week, didn't work out, went up to 70, 72, tried it again, and then we had that big kind of sell off that we've had. But these type of fundamental announcements, that's why you and I always talk about: do not be short treasuries, do not be short treasuries.
Seriously,
right?
Man, I know.
Well, lo and behold, the 10-year again defies.
Isn't it amazing?
Oh yeah, it's just loves the Fed minutes. As we know, they're going to sit on the trigger finger of the bid of buying treasuries, and they're not going to give up on that scene. Where that ends, it may be extremely bad, but 126.13 is where I see the 10-year trading right now, and the market obviously likes that. But the market internals that we've been talking about a lot lately, still very, very negative, Brett. Still, even with this bounce up, not a lot of the internals are going along with that, except on a very short-term basis.
Yes.
So to me, that says, what does that say? That says that this was kind of the relief valve after coming down.
Sure.
Obviously, 60, 70, 80 S&Ps really quick. You're going to have these moves, and can we still sell rallies? And what I'm seeing is, you can pick battle points, you can put the stops in, and you can sell into moves like this with stops. And that's basically how the game's played in trading. You know that.
Sure.
We try to pick our areas of concern, and if they don't work out, they don't work out. But we come to play the next day with our ball in our hand if things don't work out, with that same conviction based on some of the probabilities that we look at. And that's basically all you can ask as a trader. So.
And what you have here, folks, okay, this is what's so cool. I mean, this is absolutely, we haven't had this in 2-3 years, easy. And with that is large movements in the marketplace. And large movements in the marketplace, folks, spells huge opportunity for both bulls and bears. That's the reality. But, what the deviance in this market right now, to me, would be that this morning you hear everyone. Well, here, I'll give you for instance, folks, okay? Fast money on CNBC. And, I know John Najarian really well. I don't know the rest of these guys on here. But what I found so intriguing, I had a meeting, and I had to go out to the meeting. And, hey, listen, John, thanks so much for Michael. Michael got me all set up, so I'm going to have a nice little setup.
Great.
I really appreciate it, man.
Great.
So I'm in my car, folks, and I'm listening to these guys, and it was so cool because every single one of them was saying to buy the dip. And I'm saying to myself, oh, this is just beautiful, okay? Because listen, there's no doubt, folks, you can make the argument that, hey, the last 3 years everyone's been right. There's no doubt about that, all of the above.
Right.
But these guys supposed to be traders. That's my take on it. It's like, really? Okay. So it was so funny because I was going to text Nigerian saying, oh, man, this is just too funny. I mean, I know them well. You know what I mean? And they're great traders. It's not that. It's the mantra, folks, that, everyone's used to that now. Now,
right.
what a market like this does, that reinforces it even more. And what you're going to have is that you're going to have an aspect that it's good until it's not good. You know what I mean? So
yeah, I think we're talking about this morning, like, the new normal, maybe transitioning from what you're talking about, hey, buy the dip, just blindly do it every time, to hopefully getting the volatility back in the market. Whereas traders, that's kind of,
oh, totally, man.
I mean, so, but 1933, excuse me, we had a chance to leverage off that this morning. I was very comfortable with that on the short side.
Yes.
Because we had closed below, came back, retested, then we hit 1918 or somewhere down there. What was it? 1918 is the low again, which we eclipsed the previous low last week by a smidget, I see. But
which is great. For me, it's great because what happens there, John, is we're going to have higher volume. So now we got a lower low with higher volume, and they love to get tested again. That's the deviance here. It's like, oh, good. Wait, okay, so let's go up to the next swing point, see if it can handle itself.
Right. And, that's, like that 33, 37 was around where I was going to say uncle if it didn't have any follow through.
Yeah.
And then, like we talked about earlier, it's like then you got to find out, okay, where do we try to pick a battle again? I was okay with 54, 55. That hasn't really worked out today, this afternoon. I was, hoping that would be kind of Custer's last stance on it. But, the afternoon is not over yet. We're almost coming into the close. And, like I said, these market breadth statistics are still relatively negative. And I don't think the Fed just happenstance saying that they're going to, stay the course and hey, we're going to buy treasuries when we have to. I think there's much more to the downturn recently than just a rate situation. There's a lot of things going on.
There's no doubt. And so check this out, folks. The Dow more than likely is going to be up over 300. Now it didn't go down 300 yesterday. We're up 284 right now, but it will.
Right.
But that's what makes the market. If we go back to the bonds for a second, what those bonds have been telegraphing to me for huge amounts of time is that, guess what, folks, okay? We're going south, okay? This bond market is screaming. I mean, screaming, man. This thing is not. This thing is taking no prisoners, and it totally. So that's on a technical basis, but on a fundamental basis, it totally makes sense to me. If I put up the rates across the world, it's like every country, folks, money is getting pushed around, and no one's paying anything for the money. Okay, Germany's at 0.9% right now, and they're at 0.9%, and the bottom line is that they come out and said that the economy's terrible. Guess what? That means that it's going to get down probably 0.5%, or 1/2 of 1%. Okay, so these things are going a lot lower, and they're going a lot lower because people just want their money back. This is not a deal about I heard some of the channels out here today. They're saying the mantra, folks, goes like this: you have to put your money in stocks. There's nowhere else to put it. It's like, what are you kidding me? That's not even close, folks, okay? You can put it right in your pillow and just sit with it and go groove and do nothing. It's like,
there's so many things going on right now. I mean, Russia talking about internalizing everything.
Oh, totally.
Which that really, I hear the music.
Yeah, can you stay with us?
Sure.
Oh, cool, man. We got John Logan. John kicks us off every trading day, folks, 8 o'clock in the morning. We go live 8 to 6. You stay right there. We're going to be coming back with John Logan. Dow Industrials right now up 273. Nasdaq's up 83. S&Ps are up 34. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. John Logan, Tom O'Brien. Appreciate you growling and prowling with us out here. We get the Dow Industrials up 1.6%. You get the S&P's up the same, and the NASDAQ, folks, is up 1.9%. And what you will have out here, though, is that you're going to have a lower low with higher volume, and what that sets up is that bottom line, we're going to be back down visiting that area. We're talking with our man, Mr. John Logan, and don't forget, John kicks us off every trading day, 8 o'clock in the morning, folks. Get all that programming right on your cell phone, tfnn.mobi. You know, John, we take a look at your system, right? Mm-hmm. You know, right now, the lower end, you know, we hit this 1925. What's it look like at the higher end?
Well,
on the S&Ps, yeah, on
the S&Ps, what we've got. These are the inflection points that I paid attention to pretty hardcore on the way down. On the way down, we looked at 1972, that area, which we initially had broken down from on the breakdown. The original kind of starting to migrate breakdown. We talked, you talk about building cars. Right. We broke down, built some cars around 1972 with a little bit of noise. Then had the big whoosh down to 1918. Then we came back and the weekly numbers were 1955. So when we came back and retested 1955, I was thinking, okay, that's a pretty good bounce right there. Yeah. Let's take a stab at the short side, as in former support, now resistance. Yes. Former support, now resistance. That didn't work out. We went all the way back up into 72 almost. I think we hit 71 and some change. Right. Picked another battle there on the short side, and then came down and met the 1933 target yesterday, closed below it, and then used that as leverage this morning. Okay. To close below, go back and retrace former support, now resistance again, and then we headed to 1918. So the big numbers really that I'm paying attention to still are 50, 54, 55 on the S&P futures, 72 still, and then 33 down below. Now, I got it. Okay. These types of moves, again, this is it was almost like the release valve type thing, and I had a lot of people call me over the past 24 hours. I'm talking about big, huge traders. Hey, man, we're finally having a sell-off. This is blah, 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 blah. And I was like, guys, we're down like 3% from all-time highs. I wouldn't, this is not even the remotely the crux of a move down. So, watch out. We've got some ways to go possibly, but we're gonna spin around a lot, and there's no free lunch here. There's never a free lunch. In fact, no. When there's a big move like this, and I said, pay attention. There's gonna be some massive volatility here. Yes. And 33, that number obviously didn't hold earlier, and I'm okay with that. But like we said, we take our medicine if we're trying to pick the battles, and we try to re-enter. Either higher or lower, and that's all we can do as a trader. It's always the same game: lose a little, lose a little, lose a little, make a lot. And what's crucial, folks, is that no matter what side of the market on, is that in a market like this, what you want to do continually is bring your stops up or bring your stops down. That's what you can get out of a market like this, okay? Because this is a fast market, it's a great market, but you got to remember to do that, because if you don't do that, what you're going to have, no matter what side of the market you're on, is that it goes 3 or 4 points, and all of a sudden it just is down 10 or 20, or up 10 or 20. You can go both ways. Now, when John was just talking about when he had larger traders calling him, what they're looking for, which I suspect we're going to get, is that you're going to get, we've had 2 days thus far that it seems that the market is basically losing it. What that specifically that means is that the selling is getting out of control. Okay, so we've had a couple of days. We had about an hour and a half of that today, and we had an hour and a half of that last Thursday. Okay, what I suspect will happen is that when you get something like this on the downdraft, what they're looking for, what all bears are looking for, is that it just doesn't stop. And if you remember going back, and this is just not in 2008. What you want to keep your eye on for that is going to be the financials. When the financials crack, if you depending on how long you've been trading out here, when financials crack, it's over. I mean, it's over.
You know, and they haven't cracked yet. And, you know, with the amazing part, John, is that I was hearing everyone say, hey, they're holding up well. Well, they held up great, okay, in 2008 also. And then when they gave it up like nothing else gave it up, you know.
Yeah, I mean, I'm still very okay trying to pick battles on the short side like we talked about. I mean, because, you know, some of the internals that I'm looking at are still very bearish. And this is, again, one of those knee-jerk things, release valve type situations. And we've got some great opportunities even outside the S&Ps right now. The euro finally had that pop too.
Yeah.
And we've come right up into some numbers we talked about this morning with a little bit of noise factored in. We're sitting literally right at the top here of our daily profile we talked about this morning, 127.36. We're
How
trading
cool is that? Right.
Trading 127.39 right now. We've been a little bit higher. So we were, I mean, literally talking about, you know, we hate to hope and pray, but we were like, God, I just wish this euro would just make one of these moves up and let the market kind of come to us here on the euro. And it's actually met those expectations at the same time as the dollar has actually finally come down to a support area that we can actually feel pretty comfortable of maybe trying to, you know, pick a battle and buy again, because for the longest time it was kind of scary to try to keep, you know, buying this dollar so far up in the stratosphere. 85.31 is that dollar number that that I'm actually very comfortable with. Taking a stab at with stops down below. And, you know, like the thing in Russia, I mean, I was going to comment on that before. It's you know, they want to internalize things. They're okay with it. Putin's got a big ego, whatever. But it's kind of a case study on what you shouldn't do as a country these days.
Oh, big time.
To expand your economy, you know, like we talked about before, we've enabled the thinking of lower rates, devalue the currency. Lower rates, devalue the currency. That's the way you get out of messes, so to speak, in this day and time. Russia is really taking the opposite view, which I think is going to end up being the worst thing in the world they've ever done. And they need, you know, that alone, I think, has been proven lately, and especially with the way the world mantra is, that that's probably going to end up working out pretty bad. But as the other countries keep going down this road that I just spoke of, that ultimately probably will end terribly. And the U.S. dollar, like, you know, you've been right as heck on that one. But at some point, where does that come back to roost? Higher dollar, you know.
Yeah.
I mean, our ability to compete globally, which is what that thing we just talked about, you know, was you know, the MO was that kind of put us in a little bit of a crimp here.
No, there's no doubt. Hey, John, you have a great day because you're coming into your day, and we look forward to the program tomorrow morning, man. Thanks so much.
Thanks, Tom. Good to be here again.
Okay, folks, you stay right there. We're going to be coming right back. Dow up 275, Nasdaq up 84, S&P's up 34. We're going to be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our belief cards. This is by an unknown. Hope is putting faith to work when doubting would be easier. Market-wise, let's take a look at it out here. We had the Dow Industrials up 274, Nasdaq up 83, S&P's up 34. Percentage-wise, this is what you have out here, folks. Dow is up 1.6%, S&P's were up 1.7%, and the Nasdaq was up 1.9%. Gold contract up $10.90, $1,223 an ounce. What you had with gold out here, bottom line, rejected lower price last week at the $11.89. Had lighter volume. Now you're getting a sign of strength. Gold had tested the June 2013 lows. That's the silver. That's the gold contract. That's the XAU. That's the HUI. That's the GLD. All rejected them. Had lower volume. See ya. Don't want to be ya. Gold's going top side as well as the equities. Silver up 17 cents. That's at $17.41. Silver does have more work to do. Silver's got to get back in another $1. I expect that will happen. Oil down $1.14. Oil has some problems. We're at 87.71. Oil market wants to go to 85. A to B equals C to D is the 85 level. Bonds. We take a look at the bond market, the ever-ready bond market. 10-year, 30-year, 5-year, call them all to the moon. 10-year rips apart the swing point, does it with wide price spread, does it with volume, does it all. The 10-year folks today did 2.1 million contracts. It just blew away the swing point of that 126.12. We take a look at this on a continuous contract, and if you happen to be in the real estate market, you're looking to refinance, just hold on for maybe another week and a half, folks, because what you're going to see is that right now the 10 years at 126.16, the level, and this is a ballpark, but the level, you break the 127.11, and you do it with conviction, which looks like it wants to do, bingo, the 10-year we're going to be up to 130 in a heartbeat, and more than likely 133. And at 133, what you're going to see, right now the 10-year is trading at 2.316. At that particular 133, the 10-year is going to be about 1.9. A 1.9 is going to give you about a 3.5 30-year mortgage, folks. That is a beautiful thing. 30-year bond. What do we have with the 30-year? 30-year screamed yesterday, screamed again today. It's over the highs. Wide price spread, accelerated volume, all of the above. 30-year right now is at 140.27. We do 552,000 contracts out here today. If you want to see the correlation, in case you don't have futures inside the TLT, what you're going to see, the TLT did out here. The last high in the TLT was 119.43. We hit 119.52 today. We did that with 9.3 million shares versus 8.5. You have how many folks right across the bond market? And that is an exercise in wide price spread, accelerated volume, pull back on lighter volume. And in fact, if you want to see the longer range on this, this is what the amazing part is about this too. If I take up and put the longer range on the 30-year bond, what you're going to see is this. I'm going to put it up on a 10-year basis. And what you're going to see is that the 30-year bond, the first top out was July, and that was July of 2012. Okay, that's one of the lowest rates we ever had. Highest price, lowest rates. Well, when we do a correction, if you have the Art of Time in the Trade, the Ultimate Trading Mastery System, my book, you know that what they love to do, and this is all vehicles, folks, they love to expand all the way up or expand all the way down and then come back to where it started from. So check this out. So the expansion in bonds, meaning lower rates, started at 127.09, and that was in August of 2011. Well, when we came back, folks, we came back with 127.23. What it didn't do is get to the very beginning of it, number one, which is bullish. We did it on dramatically lighter volume, and then you take off again. Now, we've not only taken off, but you've taken off with volume. That's saying they're going a lot higher. That's on the technical basis. On the fundamental basis, which we've talked about many times, is that when you're talking about movement of money, you got to look at the whole world, and our rates compared to the whole world are still much higher, number one. It is a much better place to invest. Why? Because the bottom line, you have the dollar that's strong. You know, no matter which way you look at it, folks, the bottom line is that these rates, to me, are going lower. Bottom line is that that is going to basically continue to put fire, not on the market. It'll continue to put fire on free money, though. There's no doubt about that. The free money inside the market looks to me like it's basically done. Why? Because what we did out here today is this. So check out what we did. We did higher volume and hit lower prices. The NYSE did 915 million shares. The NASDAQ did 2.4. So if we go look at the, and this is the deviance inside the marketplace, no doubt. If we look at the S&P, the cash S&P, that hit 1925, closed at 1969. I suspect we're going to get to maybe 1985. We'll get up there, have lighter volume, reject that price, and that's going to be where you basically can put on new positions. Dow Industrials. We take a look at the Dow. The Dow was almost pushing up 300 points today. It went to 17,000. You know, so it almost had the numbers. Dow, Dow can get up to 17,145. But what the Dow had is it had a lower low with higher volume. NASDAQ Composite, exact same thing. Lower low, higher volume. NASDAQ Composite came down to 43.55. It closed at 44.68. And I expect this is going to go up to like 45.22. So it's going to be wild watching this whole baby shakeout. No doubt, though, volatility is here. It's here in spades. King dollar. What do we have with King dollar? Same deal. The correlations are fast, they're furious, and they're all of the above. We have with King dollar out here is this. King dollar came down 438 ticks with expanded volume. It's 50,000 contracts. What that sets up, folks, is that King dollar is going to make its way down to 83.90 to 82.97. And that's really cool. Why? Because it's going to give the commodity market room to breathe. It's going to give the gold market room to breathe. And I expect what we're going to see is that King dollar and gold are going to continue to get higher. Percentage-wise, though, every time the King dollar decides to move higher, gold's going to get hit. When all's said and done, though, guess what? You're going to have King dollar stronger. You're going to have gold at higher prices. The gold deal, folks, is $11.89 to get gold out of the ground delivered. That's a big number. What also is a big number out here, and this is a sad deal, but this is going to be a deal that is absolutely going to affect the gold market and the platinum market. And what it is Ebola, because what you have here, particularly in some of these mines, you haven't seen the press yet. You haven't seen the publicity. I haven't heard one iota that this has happened yet. But what you have to understand about mining in general, it goes like this. The amount of folks that are in the mines in Africa are thousands and thousands and thousands. Now, they come from a long way just to go in the mines because it's a job. That, I suspect, when I was looking at even a couple of these, I'm saying to myself, are they getting killed so bad just because of that fact? Well, that's something that you want to try to wrap your head around, because I suspect that, hey, listen, hopefully that doesn't happen. But when you lay the case out on fact-wise, it's like, you know what, man, all these different communities, when they get off, they come back to work. So we'll see where that shakes out. What did happen out here today, right across all the segments, however, meaning if I look at GFI, I look at Harmony, if I look at Rangol Resources was the one I was really worrying about. Rangol went up too, because Rangol does business in West Africa in a big way. Rangol was up 388 today. Has the juice behind it. Harmony was up. GFI was up. So we'll see where that shakes out. But those, there's going to be ramifications, I suspect, not just in that mining business, but in general. There's nervousness, and there should be nervousness out there. Dow Industrials finished up 274, NASDAQ up 83. S&P's up 34. You stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished up at 274, NASDAQ up 83, S&P's up 34, and as we do each and every Wednesday, we had our man, Mr. Daryl Martin. And, folks, last week we had our virtual trading contest. We gave away $10,000. It was a cash contest. It went the whole week. If you come over to our website at TFNN, what you'll see, you can look at the leaderboard. The top dog out here was Romeo Diaz. He had 74,000 in profit. Number 2 was 52,000. Number 3 was 46,000, all the way down to the top 20 prizes, folks. Each one of them made money. In fact, the least amount of money with the number 20 was $5,900, which was over 20% in 1 week. Yesterday, I was interviewing a few of the winners, and it was just pretty amazing. Willard, that was a second-place winner that won $1,500. I was asking him specifically, you know, what he did, and he was walking. And hey, Daryl, how you doing, man?
Hey, I'm doing fantastic. How you doing?
Good, man. So check this out, because this is really cool. You may not heard this. So I'm asking Willard, you know, okay, so how did you do it, okay? And, you know, I asked all the winners that, okay, because you want to know, you know, what it is, what is the consistency.
What's the secret sauce?
And you know, when Willard had, you know, he was on the top on Thursday and Friday, right up to the very top. Well, the bottom line is that he was going fast and furious, and, you know, many times you hear, Daryl has a great show. He specializes in the Nadex product. He's on 1 to 2 Eastern Standard Time here. And the bottom line, he's a great analyzer. And now what that analyzer does, folks, it will not tell you to go long or short. But what it does tell you is what is the best contract for your strategy. And so Willard yesterday, Darryl, bottom line, he says to me, he says, yeah, well, he says at 1 o'clock in the afternoon. Now, what had happened is this, folks. In the rules, it had said that you can do 10 contracts. And, you know, what he got that to read, that's all you can do. You can do 10 contracts at a time. That's what the bottom line was. Well, the bottom line, and I'll get you this clip, Darryl, because it's a great clip. He says, I took Darryl's analyzer, and he says he just kept banging it away for a full hour. And, of course, we had the volatility in the marketplace. Okay, so
oh yeah, so he just kept going like 10, 10, 10, 10, 10 when the thing was flying.
And doing all the he wasn't just doing one contract. I mean,
right.
He was doing the currencies, he was doing the S&Ps, but he was using your analyzer. You know, and that's you got to test drive it, folks. Okay, because once you decide what strategy you want, there's a lot of contracts, and what this does very quickly, once you put your parameters in, it says, okay, these are the best ones that you want to do for that type of strategy. So it was really
yeah. And he's able to analyze like 4 or 5 markets at one time on the scanner versus having to click 1,000 places.
Exactly. Yeah. So it was really cool, man.
That's awesome.
It was awesome, man, because it was like he said he was banging it out for an hour, and that got him what he needed, man. Pretty wild, right?
That is, yeah, wow.
I know. So, hey, I know I'm looking at if you're driving in a car, folks, what I'm doing, I'm looking at his diagnostic deviations. And in this type of market, these deviations are crucial, aren't they?
Oh, they are, because, I mean, you'll have, like, one day where a deviation move could be twice what it is the next day, and you have no idea what a big market move is that day.
Yeah. Oh, that's cool, man. Okay. That is cool.
You know, I'm looking like here's euro-dollar today, and we've had some crazy volatility in euro-dollar, right?
Yes.
And so it said a one deviation, the expected move on the way up is 27.33. And that's, I mean, we just broke that by a few ticks. We're just hanging out right there at 27.37 right now. That's just euro.
Isn't that cool, man? Okay.
I go over here to, you know, I can go to gold, I can go to euro, I can go to pretty much any market, you know, and bring it up. And you can see, like, right here gold, we were like, okay, we expect it to go up to 1224.6, and then we right to 12. I think the high of the day might have been 1224. Let's see, what was it exactly? We had 1224.5. So it didn't hot tick. It told you exactly how far the market would move from settlement. And, I mean, it lets you know how far. Like I said, it doesn't tell you long or short. But if it's going up, this is how far we expect it to go. So that gives you a profit target. That gives you an area to tighten your stops.
Right.
That gives you an area to look for reversal trades. So there's a lot of things. And also those little 0.5s and 0.7s in between.
Yes.
That's the area where you expect there to be some resistance. You know, sort of a support resistance, sort of like a fib level almost, if you will. You know, and you'll see over time and time again when it hits these, you'll see it slow down and hang out at that level. It's usually not a straight down. Now, so like it's that settlement. It goes up to 0.5. You see how it just hangs out at 0.5.
And folks, this is I'm going to have Darryl explain to you how he put this together, because he lets everyone know. Okay, it is in a box, but it's not like he's hiding how mathematically he's done this, okay? But what's really cool about this is that because the volatility changes, and this is important to wrap your head around, then the volatility, the numbers change. And the way Darryl has put this together, it's dynamic, meaning it's changing with it. Because, needless to say, this number, all of these numbers, inside whether the gold contract, the euro, or the dollar, would not even been close to the same deal 2 weeks ago. Guess why? Because the volatility was different. So, you know, can you just explain, Darryl, what they're actually looking at inside that? Because this is when this really, I think folks can really understand the power of this, meaning that, you know, it's just not a formula every day. It's a formula based on what is happening now, not yesterday, not tomorrow.
Exactly. It's not a yesterday thing, because if you go yesterday, I mean, think about all the volatility we had last week.
Yes.
You know, we had this like triple deviation moves on a lot of things,
right?
You know, which is just unheard of. And so instead of looking at past movement, which, I mean, think about every disclaimer you read. Past performance is not indicative of a future, right?
Yes.
So why would you use past price levels, you know, to determine, or, you know, past price volatility to determine future volatility? That doesn't make any sense. You can have a flat day and then a big day, then a flat day. But what you can use to determine what is the expected movement? There's a thing called implied volatility. This means expected movement. It's in the price of an option.
Yes.
Okay? And, you know, you have to do some math. I mean, I do all the hard work for you. I put it in black and white. But we take that expected movement out of the option. And when I say expected movement, think of expected movement as being the premium that an insurance company would charge somebody for car insurance. And they're going to charge that 16-year-old boy a whole lot more than they are the 40-year-old, lady who's never had a car wreck.
Right.
You know? So if they're like, wow, we expect there to be a lot of volatility in the way this person's going to drive, they're going to charge them more. We expect there to be not a lot of volatility because this person doesn't even have a job or whatever. They're retired. They stay home. They only do a couple trips a year.
Right.
We're going to charge them less, okay? Well, that's how the option market works. For example, Apple's about to come out with earnings. I'm not saying like right now, but I mean earnings season's coming up, right?
Sure.
So we expect a big move always on Apple when earnings is going to come out.
Right.
Okay?
Yes.
So therefore, the options, the insurance is going to cost more. So that expected movement is built into it.
Right.
Okay? When that's out and everything's said and done, there's not that much expected movement maybe over the next month.
Yeah.
So therefore, the options get cheaper.
That's crushed. Yeah.
Exactly. What we call it a volatility crush.
Right.
You know? Well, if you understand that concept, you don't have to get the math and the statistics. I never took a statistics class in my life, okay? Literally, ever. And, I guess I took classes, but not in the classroom.
I took
it from floor traders and stuff.
Right.
And so I was taught this method by a floor trader for what's called gamma scalping, a totally different reason for doing this.
Sure.
And I got the idea literally just a few years ago, and he taught me this thing like 8 years ago. And I was like, I wonder what would happen if I used that formula to calculate how far the market would move every day. And I started it on just a couple markets, and then I built it up and built it up. Now I have it on like everything. But
how cool is
and
that?
it's just insanely accurate. It's the market telling you how far the market's going to move today, not tomorrow, not yesterday.
And as Darryl was saying, folks, it's great for entering positions, taking profits. Don't forget, every trading day, 1 o'clock, right here, 1 to 2. Darryl, you have a great night, safe night. Look forward to the show tomorrow.
I look forward to it.
Okay, man. Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished up 274, NASDAQ up 83, S&P's up 34. And if you do have an interest, folks, if you have money and, well, first off, if you don't need money for 4 years, the cash for 4 years. If you have it in a CD, something to look at is the first mortgage program that we have at the Tiger Real Estate Opportunity Fund. You can go to our website at TFNN. You can see it right in the breaking news. There's a video I put together so you can see how this works. We pay 5% on an annualized basis. 4 years. It's a 4 years balloon mortgage at 70% of the appraised value, third-party appraisal of the unit. Check it out on the front page of TFNN. It's good monthly income. That's what it really comes down to. So that is focused towards someone that is either looking for dividends and with the secured principal or looking at the CD market with the secured principal. That's what it comes down to. Let's go to Lou in Nashua, New Hampshire. Hey, Lou, what's going on?
Tom, how you doing?
Doing great, man. You having a good day up there?
Yeah, not bad at all.
It's beautiful out, right? I saw the temperature. It's like 70 degrees, right?
Excellent. And who knows how long it will last, right?
Oh, you're going to get a couple beautiful months. These are great months for you guys up there.
Yeah, it is beautiful.
So, the euro.
Yeah, the euro, yeah. Where do you see it going, Tom?
Well, you got, we're at 127.38, 129.95. That's ice. I mean, that's easy. Could even get to 131.
Wow, okay.
I mean, you know, went straight down from 139 to what, 127, to 125. Yeah. You know,
right.
I expect what you're going to see here, folks. This is what ends up happening. So that correlation there, you know, if we just did, you know, so picture in a bear market, you know, you get a 0.382 bounce. That's a normal bounce. A 0.382 gives you $1.30. This type of move that we got down, though, meaning you came down so dramatically, you know, you can get a 50% bounce. That's 132. You go over to the dollar index and just do that opposite correlation, the DXZ4. So if we look at this correlation here, you know, dollar went nonstop from 79 to 87. So this can come back to 82, 97 real easy. What you want to figure is this. This is how this thing goes. So picture, that's a technical basis. The fundamental basis goes like this. All you've heard the last 3 or 4 days, right, is that the dollar, the dollar, the dollar. Okay? Now, what happens is this, and I'm sure you heard me do this many times, folks, okay? The bottom line is that you sell them when they're yelling. That's the bottom line. So, and you buy them when they're crying. So what ends up happening is that, and I don't think they're going to be crying, okay? But what I do expect is that I expect a larger retracement in the dollar than would be normal now. It's both ways. It's actually what we were just talking about with Darryl. The volatility is much larger. So as the volatility gets larger, what ends up happening, the moves get much larger. Right. And there's plenty of ways, though, that you can correlate that dollar movement, euro movement, and I would correlate it with the gold, because gold was screaming, you know, that basically it was rejecting lower price, you know. So, cooking, brother.
Great info.
Okay, man. Have a great one. Have a safe one. What's going to be now? This is where this gets interesting, folks, in the metals market. So, we rejected lower price. You had lighter volume. We got a small sign of strength. You know, the sign of strength today was good. 181,000 contracts. You know, we went to 1224. We're at 1221 right now. That level there alone, this is what that level does, folks, okay? That level sets up on a price projection basis, and it sets up really well. It sets up a 1297 gold price, okay? All we need is a 1241 gold price. Once you get into a 1241 gold price, watch what ends up happening. Markets are just so cool. So check this out. I'm gonna put a continuous contract on, and when we get into the 1346, cool. Okay, so once you get into that 1241 area, guess what it sets up? That sets up not only 1346, it sets up 1392 gold. That's how that shakes out. Because everything in the markets, okay, like staying in contained boxes. And we know that nothing is exact. There's no two ways about that. But what does happen is that they travel in highways. You know, if you know our man, Mr. Bud Rolfs, okay, he's the ultimate at this. I mean, the absolute ultimate. And his channels, okay, he's the channel king extraordinaire. And his channels, whether it's Route 128, whether it's 95, whether it's Route 1 in California, yeah, do they go over the cliff a few times and they break those channels? Yeah, they do. But guess what happens, folks? And this is what's so cool. When they extend themselves and they break out of the channel, right, what it means, and specifically, we're talking gold right now, gold broke the channel, and it broke the channel down at that 1223. And what that normally means, with our man, Mr. Bud Rolfs, is that you're not only going to go to the top of the channel now once you get back inside of it, but you'll go break the other side of it too. The extension is much further. So it's really cool watching this shake out. It's particularly cool because it worked. But, you know, what you would want to see if you're a gold bull or metal bull, we got that sign of strength today. You're going to want, and that's a good follow-through, you're going to want another sign of strength ASAP too. Another 3 or 4 days. Guess what? You get that another sign of strength in 3 or 4 days, oh man, watch out. You're going to get some real action. And always remember, you'll always get a retracement. So you don't have to chase anything. Well, there's no chasing it at this point because these equities are still at dramatic lows, not small lows. And they definitely got some juice inside them today. And what you do want to do is that you want to find the equities that have high volumes. Like, AEM today. AEM was almost up 10%. AEM broke, it sold down, we're at $30. It broke its downtrend from 38. You know, wide price spread, accelerated volume, 5 million shares, all of the above. If you want to hear something really cool, so check this out. This is really intense. If you get the gold report, you know this. September 30th was the largest short position in the future gold market for the last 4 years. That is heaven to a trader's ears, folks. You know, especially when you're on the other side of it. And why? Because the movement, so September 30th was the largest short position, smallest long position, okay? And when I'm looking at that, I'm saying to myself, that is so cool, because guess what? The futures are just like the equities. Blows my mind when people go short at lows. It's like, really? But bottom line, that's what you had. Well, guess what? I suspect most of that's not even closed yet. The reason being is that when you look at that structure, you know, that structure is saying people are, you know, shot from about 12.25, 12.30, even, you know, 12.37. And they'd still be doing all right. Now, if they parlay down when gold did get smoked last Friday and Thursday, well, that'd be like, okay, maybe they closed it out, maybe they didn't. What you will see, as soon as gold gets over another $5, they're going to have to cover, and they're going to have to cover in a big way. Why? Because any trader in their right mind, not that they'll all cover, but they'll know that it's outside the range now. It's not in the range. It got above the range. It has the juice behind it. And if they don't cover, the broker-dealer will cover for them, because what you do have with gold, gold is $100 a point, folks. You put up $5,000 for a contract for 100 ounces, and bottom line is that it's $1,000 a point. So what we had out here today was a $930 move. You get another couple $1,000 moves, and then what you will see is that you will see the aspect that the broker-dealer community itself will start covering them. Oil out here, bottom line, you're at 87.56. That baby is on its way down to the 85 level. What you do have in the XLE is that the XLE has been pushing the lows, the highs of the lows of February 5th. And February 5th is that big benchmark, folks. The gap come out with numbers after the close out here. GPS, that closed at 41.90. Right now, that is trading out at 38.20. That's going to be a monster gap away. And if you take a look at it, you'll see that we already had gap down off the high with volume. It has a high volume low at $39, no, at $37. And this is a classic if you want to see how markets go after high volume lows, high volume highs. This thing is sticking out like a sore thumb. $37 flat. That was the low of April 11th and 30, what did I just say, 37 flat? And you're at 38.25. The thing's going to go right there. It's just a total mind blower how these are basically. But you know what that is, folks? That is the supply and demand curve. That's all that is. What stocks are about are pricing them up, pushing them out, sticking people with paper, and then bringing them back down again. 877-927-6648. Dow finished up 274. NASDAQ up 83. S&P's up 33. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You had American Express up 206. Coke was up 63. You got Disney up $1. Big Mac is up $1. 3M was up $3.73. It's a dead cat bounce. Big Blue up $3.65. Let's go to Gene in Clearwater. Hey, Gene, what's going on?
Hi, Tom. I was just reading on the Motley Crew, the Motley Fools, something about master limited partnerships that invest in natural gas. Are you familiar with that?
That invest in natural gas?
Yeah, I guess. Have you ever master limited partnerships?
Sure.
Excuse me. They invest in companies, I guess, that drill or whatever for natural gas.
No, that'd be correct. What you have is this: is that a master limited partnership is a vehicle, folks, so that has been popular the last 5-6 years. And what that is, Gene, is that most of them are basically, they can be anything, but a lot of them are pipelines, so that there is a cash flow that's available to the investors. That's how that works. Now, that still doesn't mean that your principal is still at risk, but most of these master limited partnerships that do trade publicly, you know, pay a good dividend. So is there a certain one you're looking at?
No, not. I was just looking at the concept, and I was looking at the good dividend that they pay. And so
what was the dividend that you were looking at? How much?
Oh, I don't know. I think I'm going. I think 5% was one of them.
Yeah, no, that would be real. Yeah, they run anywhere from 3.5%, 4%. Some of them even higher than that. You know.
Do you have an opinion on them? Do you think they're
all? No, they're good vehicles. They're cash flow vehicles. That's what they are. So they're great vehicles as long as where that cash flow is coming from, as long as that cash flow is coming from, let's say there's a lot of oil pipelines, okay, that, you're actually renting the pipe, okay, so they get royalties out of that. That is a real sweet one because that pipeline is not going away. Now, what would happen is that the dividend could get down because, like, oil's going down now. So most of the time, if oil's going down, then what ends up happening is that the
by the way, these are natural gas pipelines.
I understand. I'm trying to explain to you the concept. It's the concept more than it's the. No, that's all right. No, it's the cash concept of the cash flow that you want to be looking at if you decide that you want to invest in one of them. What's important to understand, though, just like any other investment, let's say that the cash that you're buying something at $20, right, and that it's paying 5% dividend, okay. So in that context, you're getting the dividend. The difference is that that $20 can go down to $10. Just say your principal is not intact. But as to vehicles, yeah, you can do some work on them, and they're decent vehicles. They're particularly decent vehicles because of the fact that you can't get interest in a bank. You know what I'm saying? So
yeah, right. Can I ask you about one other stock?
Sure.
Or a stock?
Yeah.
Bank United. It's a Florida bank, and I've been watching it.
Do you know what the symbol is by any chance?
Oh, BKU.
BKU.
BKU. It's out of Miami.
Okay.
And they in Pinellas, they've started with one, and I think they're up to 4 or 5 branches now, and they're all over Miami.
Okay, so let's take a look. So it's hitting a low. It's $29 out here today. Let's see. Yeah, I know. One of the tigers out here, Gina, saying BK, what a great symbol. And that is a bad symbol, there's no doubt. BK to go BK.
Why?
I know. Bankrupt, BK.
Oh!
I know. Okay, so, looking at... No, I'm with you. Looking at this, you're at $30, somewhere around $24.
Whoa.
That's where it wants to go back to right now. Yeah, there's something wrong. I mean, the stock has been coming down pretty dramatically.
How about the dividend? I really haven't figured out how to get a little... I can't figure out the dividend situation.
The dividend is 2.78. The way a dividend works is that it's a lot easier figuring out the dividend on one of those master limited partnerships, by the way, okay? Because the way those are set up is that they have to throw the cash out to the limited partners, where BKU pays a 2.37, I think, 2.78 dividend. And that basically is up to the board of directors what they will pay and how they will pay it, so a little bit different. But
okay.
I wouldn't.
So you see it going down to 24.
Yes. So at 24, that dividend would go up higher. And at 24, if it has light volume, then you get some action there. Meaning you could buy it.
Okay.
Okay. Have a great one. Have a safe one.
Thanks.
Market-wise out here, folks, this is what you have. So you get a nice bounce happening out here. We are at cash S&P of 1968. Bottom line is that that baby can get up to 1985, and expect you're going to get there, and would likely, you're going to get there pretty quickly. Why? Because what you have, folks, is that this is a highly volatile market, number one. It's set up really great for bounces both on the way down, on the way up. What we did out here today is this. We went to a lower low, had higher volume, and what that sets up is that sets up that you're going to be back down to those lower levels. You know, so that's really important to understand, that you have a market that is in a downtrend right now. Now, don't forget, folks, you stay right there, because every trading day we do 10 hours of live programming. Allie Ford's going to be up next with Mindful Living, and she's going to be talking about how to handle change with grace. That's a beautiful thing, because change, folks, is always something that you can go, well, when you do go through change, you know, sometimes you want to go through some changes, other times you don't want to go through changes. Bottom line is that each and every day, everything changes. Yesterday's gone, tomorrow's not here. What are you doing right now? And us being in the marketplace, we know that each and every day this changes. In this particular marketplace right now, I think what we've seen is that we've seen a huge change in trend. And if you do put up the SPY, and I'll leave you with this, this is a bear leaving you with this, by the way. If you do put up the SPY, what you are going to see is that you're going to see that you broke the larger uptrend rather. But that break in the trend, folks, is a 1340 S&P. Always remember, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. You stay right there, folks. Allie's coming up next with Mindful Living. Gonna be